Well, hello there. Wayne's World party time. Excellent. Na 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 na. Party on, Wayne. Party on, Garth. Wait, no. Top Gun here, and I got a good one for you today, folks. I'm all charged up with victory laps of being right. Although it's still really depressing because, statistics and whatnot. All this pain in the market means more job losses coming, more employment rate going up, and that's bad things. But I was right, and I like being right, and so I share that stuff with you guys too. Hope you enjoy the entertainment value because I'm not a financial advisor. We're gonna have a look at some things that are going on. This is a market video, so we're gonna have a look here. All right. First off, we like a place called Market Watch. Market Watch. Financial calendar. All right. So, we can see today, we'll talk about the, oh my, the CPI came out. Oh, and there's the listed numbers for it. It's nice and easy too. 8.3. Oh, ouch. It was above expectations. That really hurt. No one could have seen that coming. Unless you've been watching my channel and you know inflation is not over with. Just because oil prices come down doesn't mean anything else is. Trailing and leading indicators. These are important. It's all about the critical thinking, guys. So Wednesday, we have the producer price index. Not important. We don't care. And then Thursday. We've got the numbers that are going to matter. So Thursday, we're going to have the initial jobless claims, then the continuing jobless claims. We'll even see retail sales, and then, where is it? Wait. Was that not this week? Industrial production index? Import price index. These aren't that big. The initial jobless claims, people will be betting on that. And basically, good news is bad news, and bad news is good news. More jobless claims, higher unemployment, means the Fed is doing its job, which is good. But the economy go down. Boo. Which still hurts stock prices. But if that initial jobless claims goes up, or goes down, which is good news, more people employed, well, then that means more spending and more inflation. Then the Fed's got to work harder to kill those jobs. That's kind of, It's not the jobs it's actually trying to kill, but that's a side effect of what is going to happen in the deleveraging. Basically, the whole system is, I've said this more than once, $3 trillion. 5 trillion debt dollars. What? Just as good as regular dollars. Everyone spends them like that, but you leverage up your house to buy another house. And you leverage up that house to go do this, which is taking out a loan against your asset, minting money, debt money, just out of nowhere, like the Fed, because you got an asset. But then you can't repay your loans. Uh-oh. This is when your assets get liquidated, which means they get sold. When things sell, their price goes down. So at some point, there's a deleveraging that has to go to some point to pull all those assets down, get sold, hopefully not domino rate into extinction, and cut that inflation down. And then there'll be a bunch of jobs lost, a lot of unemployment, a lot of pain. The Fed can start its easing. Hopefully it doesn't do it too soon because inflation's like a case of herpes. It will come back. All right, so this week, Friday, we really don't care about Friday. Probably see short coverings on Friday after we get the initial jobless claims. We might even see those short coverings Thursday evening like we did last week, or Thursday afternoon. We'll see how that goes. If Apple's at 150, that'd be a great time to cover some shorts. At least in my opinion, my humble opinion I've been shouting out on Twitter, if you're one of the 1,000 people that follow me there, you would have heard me tell you to short right here on Apple. A little early. Expectations, it could pop high as 180, which it didn't. Stop loss, not even reached, and down she came. Ooh. And then right here, literally on my video yesterday, right after all the simple math about Hex, if you were watching to the end, like a good gold star person, you also saw me explain the short I called on Twitter, being, oh, look, the tea leaves told me about another opportunity. The Magic 8 Ball says, maybe this is BS. Oh, maybe you should short it. Stop loss? Oh, inconsequential. That's how right I was about calling BS yesterday afternoon when it hit there. I think it piked just a little higher. I think I said 168 or 169 or something for stop loss. Woo. Yeah. And that didn't even respect the 157 line of support at all that I have marked out. Like barely slowed down and then, oh my dolly, we're heading straight in for that 150. It'd be funny if we hit it by Thursday morning and then come back off it because of algorithmic short covering, which would leave enough space the week after for another rally. Oh, wouldn't that be ridiculous? A third shorting opportunity. But this is where both of these shorts, when we hit about here, that's where I would close them if I was able to open them, if I'd had the money. But you guys that might have money watching my show, I'm not a financial advisor. I'm not holding your hand. I have no fiduciary responsibility. I'm just telling you what the tea leaves tell me. And the tea leaves say that Thursday morning into Thursday afternoon, if the volatility settles down, it'd be a good time to close some short positions because always be booking profits, or so I'm told. I'm not a financial advisor. Volatility index. This is important when opening puts and shorts or calls, whatever. When you're opening with the market maker, volatility index affects the price of placing such wagers, which is where my earlier Apple short was even better because the volatility index was so low, below 20. Whew, my. So, like, we look here at an entire year of volatility. And, yeah, I mean, we've just had a very volatile year, and there's no signs of slowing down. And the more volatile it gets, the more expensive it gets to open puts and calls in the market. So I did not have that range or that ability. And I will show off the NASDAQ and the SPX. The NASDAQ peaked over my trends, and I called the same BS kind of short on it. And then, the SPX respected the trends. So the SPX is the one I'm looking at because it's the guide. The NASDAQ basically is too limber with what it's doing to really give me an accurate picture. That would have indicated, ooh, we've got a rally. Now we're free of the trend. We can go. It lied. SPX, much more reliable for measuring those macro trends and still affected by the ETFs and movements in Apple and Tesla. So this stuff moves very similar together. All right. And the dollar, we had a look at that yesterday. Oh, it didn't even come down to this line before it bounced right up and off. Oh, my. Oh, my. Just literally less than 24 hours ago, I gave you probably the best warnings of ever for the stock market because literally they called this like the worst stock market day of the year. Everything dipping 5%. Like everything was red. Oh, everything. And I called it last night. But I'm your little secret. Don't hit like and subscribe. Other people might find out about this stuff. I also made that drawing and did that little voice to the moon. And I'll repeat it because I was wrong. I was dead wrong here, folks. I drew a picture saying it could go up and touch this line and then to the moon. So we'll forget that. It's straight to the moon. Because apparently the moon is down south. Wow, ouch kabibbles. She came right down the 2,000 mark. So again, we're right back here. And there is still more pain to come as we've gone over. Oh, let's switch modes so I can move my chart again. So I've talked about the lines we've got to close. There's a lot of pain coming, and this bull trend will not hold. And Hex, unfortunately, my lady, unfortunately, she wicked out under. She killed that weak support of a bull trend. So now this has become a little bit of a firmer support at 3.56. And we bounced back up for now. This blue line, we're not going to go down any faster than it at this point. Now that we've crossed the resistance, it should be support. Not that it really seems very comforting when that gives us a lot of room to move down. But that red line, 2.9 cents, that'd be the double bottom that I think will be really firm to give this market the ending signal to all the pain that Hex has felt. Because Hex, traditionally, it's at least a leading indicator because it moves a little bit different and it started its bear market a lot sooner. It's shaken out all of its pain. I mean, granted, the global economic position's not in its best, but institutional money is still existing, and things are happening. So I have optimism. Oh, I do have optimism. As Paul's chain comes out and a bunch of other things, that we should get a middle to the W. What do I mean by middle of the W? Let's zoom out to get a better look at Hex. Alright. So, long-standing line. And we just kind of smash up where we're trading into itty-bitty nothingness down here. But traditionally, like, this right here, this middle, should have been the middle of a W. And as we came up, we broke the resistance. If the market hadn't gone to all hell, that probably would have been our next peak up to test our all-time high. But now that we've ridden down like this, I think we're about due a middle to our W at least. And yeah, I'm talking about a 10x. It's getting about there in the TA for the way that this likes to trade. I don't know if it'll do that or if it'll just come up a 5x or a 6x. But it's time to show some progress, and we'll probably lose that a bit and never come back down to the lows we're going to see right now. And then up. And the reason I'm also kind of feeling the W at this point now that Hex has traditionally done is as Pulse Chain starts to get close by the news, sell the event. Probably take another dip as people do some really ridiculous things with their Hex when Pulse Chain launches. But those dips should get lower or higher and higher and higher. As in, we won't see any more of this low price again as we start to pick right up off of this. There's some beautiful things coming to Hex over the next year or two that are really going to make it shine. So, not being a part of it, I'm not willing to make that mistake. I am in. Oh yes, I am in. And so let's draw this out for the folks, what I'm kind of imagining here. So, we're going to, since we've broken out this line, we're going to come down, double test that bottom, and then, assuming we'll stay along that bottom for a while with the market pain, but the next couple months in the market are going to be really iffy. So if there's a rally in the market, which there should be, I believe we'll get back up to at least 10 cents. Then more pain in the market will probably bring us back down, and we'll establish a new low, a higher low. Then we might get all the way up to 10 cents. Sorry, that was 8. And then, even when the market takes pain, we might lose correlation. This is me being hopeful and optimistic. Then we go back up to touch this. We get a pullback, some fight for a while, and then we get our mighty spike. And then we lose it, and probably lose it hard, but again, we start building a new low. And that's how the W middle would start, and God knows how the rest would go. People will do Fibonacci retracements and try and use history. And we saw by my drawing of Bitcoin how wrong I was. Like, okay, general idea, and I'm drawing it out because I like to be conservative in smoother ways. There's going to be a lot of action going on. I mean, we've had a very tradable bottom since I called it in the sideways action in the range that I assumed. So I'm feeling like Nostradamus here. Trying to stay humble about this stuff because I could be wrong. This is only what the tea leaves tell me. And I'm not perfect about everything. I do get some things wrong here. But generally, overall macro, I'm very, very right. And macro, soon we're going to be heading to a middle point of the W. Who knows? Maybe we'll get a Christmas Eve or New Year's Eve blow off, like at the 1 cent blow off originally. I wasn't here for it, but I heard it was epic. Who knows? Who knows exactly when and how? And that's why I like to get involved at the cheapest places I can. And so right now, we're barely holding this one for support. We'll see how it plays. I think the more pain in the market is going to bring us down to here. But when we hit here, I plan to buy some. Even though I missed this one and I had to buy up here on this line, I'm going to buy on this line. I'm going to buy on that line. I really have starting to get faith that a double bottom will actually hold in hex just fine. As long as we don't crash out too soon. I think this will be okay, guys. I'm starting to get some hope. But the tea leaves haven't given me a good enough reason yet. Boom. I mean, here's a chart so we can see I don't have full history on this chart with TradingView. One of the disadvantages of not using a crypto site, but I like the layout and the tools. So you can see the RSI mapping, how it plays out when we start to get into a bull run territory, and then what kind of pain we've had. And then we were starting to get into a bull run territory, and it got cut short by the market pain. And it's been a long road retesting, but it's not quite right yet. We're starting to get green impressions for the first time since, October, almost a year later, August 1st. 10 months later, we're starting to get green impressions again on the Instagram. Could be a fake out, but we've crossed over on the week here, the 52 week. Like, look, the weekly. There are some signs that Hex is getting happy. I don't know. Volume has definitely dropped off at the moment. And traditionally, I think when we're about to see a real reversal in trading, we'll see a pickup in volume, I think. Or when we see a real bottom off. I don't know. This has been weird to read. It's definitely like you can see a dramatic change in volume also as price went up. It got harder to trade, and then it dropped off as market conditions went down. So, green impressions are not everything, but they are pretty important. So, I do think there's room for another dip into the red, because look, here was some green impressions on the Instagram, some hope correlating right with, when we broke out of that. And then some hope where we finally have broken out of this line and almost broke out of it. We've been fighting this line, just barely a green impressions. So there is some definite room to start looking at some other numbers if we're looking at that long of a time scale. I mean, I was really hopeful for dollar hex by Christmas, but now I'm just going to be hopeful for Pulse Chain launch by Christmas. So, even if it takes a little while for us to have our major parabolic, I think we'll finally start getting some better action as we get through this year. Surprisingly, as the market goes badly, we'll see. We will see. Either way, I'm locked in with my hex stakes for the roller coaster ride. Yeah. Aren't you too? It's fun. I like it. Oh man. A lot of stuff going on in the system. It's exciting. And mostly because I'm involved in more crypto projects than just Hex now. The one supporting Hex and free claims I got because of my Hex stake. I'm starting to see, yeah, I'm breaking even. Even without a good rally up, I'm not as poor as I once was in crypto. And I'm like, This is why just holding it pays off. So, all right, middle of a bear market, and my portfolio is not on fire anymore, and we haven't even had a pump. Like, and I'm looking at all this red, and I'm going, yeah, that's cool. Not for everyone else. Sorry about your luck that you don't know about my channel. Well, I'm doing okay. I got a bunch of value locked assets that I sacrificed. That stuff is priceless and not even launched. That value is destroyed and yet preserved all at the same time. And then the other stuff that I kept, yeah, alright, Hex is taking a beating, and it's not even on an up path right now. But I've DCA'd in my whole way down. It's not that it's not that pretty, but it's not that bad. It's not that bad because my Hex stakes have allowed me access to free Hedron and other mintable airdrops. Oh, that's some supplemental income. And then I turned into a degenerate. I did that last stream. I helped people trade through Luna. Unfortunately, I didn't have time to do a video while I was buying in. That was mass chaos. But I got people out of the burning fire, even though I keep an eye on it because my dear old aunt, she got horribly wrecked. So I have an eye on it just to see how her replacement coins are doing. And I check Classic once in a while, just for a laugh. Because, I still have some tokens, because some wonderful viewers sent me some after I sold all my position, because they're like, here, have a souvenir. I'm like, perfect, okay. And if it ever does anything really, really crazy, I have to sell some of my souvenir and use some of those weirdos as exit liquidity. You've been warned. Luna's dead. I went in and warned people to get out that were also doing the same thing I did when the Parabola shifted. Any mania that comes is no more reliable than Bed Bath & Beyond. You're likely to get trapped in there. So don't. Only some of us that were smart enough to go play in the first time that made a whole bunch of profit and maybe still have a little left over are not selling it because it's funny. And if it loses a 0 or even 2, thank you for the bonus. Because I didn't make enough money off the Luna. Well, I mean, I didn't, considering it didn't balance out all the losses I've taken. But it balanced a good chunk. And then when you add in the free claims and the other stuff, and I'm like, I'm only like 10% down net. Like, really? For a year where everything's gone down like 50% since I've gotten in, like all sorts of pain, or 90%, like crash after crash. And I'm like, I'm only down a little bit. That ain't too shabby. So, oh well. I missed the Apple short. I give that one to you guys. And I even, tell you, booked some profits. She's almost there. We're slowing down in the post market, Yeah, I'm pretty sure this support matters. Just hold out till Thursday. I don't know. Unless you're really nervous. I mean, do what you want. I mean, this is a great place to book profits in one day for a short. And this for a week of a short. Yeah. If you're in the first position, this would be a great time to close the first short. Book those profits. Laugh them up. Eat them up. And it should mean even if this one goes heinously wrong, you're fine. That's how those work. That's why you do layers and stacks. Just like you do hex stakes. So have fun with that. Alright? That is the freebie that I'm giving everyone. Pillage and take the market maker's money and bring it to crypto. So, the institutions don't actually get to still own their money when they participate. We own their money. Hardy har har. I like that. Don't you like that? I like that. Crypto rocks. Middleman D does not. So, yeah. If you want to take advantage and game a system, I will give you all the stocks to game and short. Yeah, you go have fun with that, you degenerates. In the meantime, I'm going to keep DCing into Hex, and if something major pops off, I'll try and throw you guys a bone. Because, I am nowhere near retiring. I like my day job a little bit, even though I get covered in drywall mud. Respect the craft. Today went nice and smooth. So, I'm going to keep working until I'm very wealthy because work is what's let me keep buying crypto, keep investing, squirreling a little bit away when I can. $50, $100, not much. Gotta be careful with the gas fees. Sometimes I'm up till 2 a.m. waiting for the cheapest gas just to maximize. Like, you're not taking my money, man. You gotta do what you gotta do. At least I gotta do what I gotta do. A lot of other users are like, whatever, I got like thousands of ETH. Yeah, whatever. I'll be that way about Pulse. It'll be fine then. So, anyways, yeah. Hedron, still not a whole lot of change. We came down hard towards testing this line or this range. You see, this is a little extra hope too because Hedron's a funny thing. And we've established where the bottoms are. Pretty hardcore, like the beginning dips that we will not see. I don't think we'll even see this one again. So I think we're in a higher range. Probably above this line. This is probably our absolute floor bottom. Even if all things screaming painful kept this bull flag flying at it. No, that had some more significance to the way it was led there. I don't know. I'm zoomed in on the. That's why. Oh yeah, I shouldn't have moved that. That was exactly where that needed to be. Yeah. There we go. Wasn't too hard, was it? No. All right, so zoomed in those bull flag. Yeah, there. Yeah, a little clearer. So we've got our bull flag heading in our down direction, but it's still a bull flag, not a bear flag. When it will change direction and go up to form the next bull flag, it's gonna be in this area, I'm thinking. I'll circle it for you. Okay? I'm thinking if we bounce off this red line, you're gonna see another bull flag. But we might not bounce off that line, folks. It's where the tea leaves are not so clear. Hedron is so new. There's so many dump-amentals. It's a long man's game. Not sure if this will hold, and we'll ride the bull flag all the way kind of down to this will hold. If this don't hold, this will hold. This might hold. It might. It's soft support. That's why it's not that bright. So, green or blue, I don't think we'll go down faster than this, even if we rode all the way down to here and then popped up. And yeah, I don't know why. I see this kind of working out. So this bottom line somewhere, well, that's all the way into October. Somewhere by there, we're going to be pushing up to test that all-time high. Could be sooner than later, could be later than sooner. Tea leaves aren't clear yet. Maybe I'll let you know when I see it. I don't know. Comment if you like my tips, if you even care about my market knowledge. Because, yeah, I find it very interesting to learn, futures, such a joke. I mean, everybody tries to respect gold, the old man in the room. It's the asset from all time. But old man gold's not alone in the room. What do you mean he's not alone in the room? He's not alone in the room. Because these futures aren't even old man gold. But they set old man gold's price. Well, what do you mean? Well, I mean the old man gold here, the oldest asset. You imagine how much gold is in the world. Whether it be 1,000 tons or 1,000,000 tons. Whatever you think it is. We're not even... Fine, we'll Google it. Okay, there we go. 250,000 metric tons. Now we know. Million was a little too high. Wow. All right. Now that we know how many metric tons there are. Scary fact about futures. Because of the central bank. The Central Metals Exchange, not the central bank, and JP Morgan. There are 250 times the amount of futures in circulation than there is gold. So take that 254 or 244 metric tons, multiply that by 250, and that's how many futures representing gold are out there. And they're not even IOUs. You cannot even trade. You can't trade a future for actual gold. If you really want to get gold, you own the bullion or you invest in a mine. But the mines aren't doing too well because there's not a whole much more on the planet to mine. This is why I talk about Elon's rockets being useful when maybe they get into space and actually man the asteroid belt. But until then, we've mined up most of the easily accessible gold there is. The mines aren't too profitable. There's not a lot out there. So yeah, futures trade. And by increasing supply, you kill demand. Basically, there's so much supply that it keeps the price down. It's how they manipulate precious metals markets. Just in case you weren't aware, they do it to silver as well. We're even going to add one today. Copper. Which one do we want? I don't even know. Let's just take this one for now. Let's see, where did she land up? Where did we get our copper? There's our copper. Bring it up here. So, copper, basically, I use oil as a primary indicator of inflation, not a lagging one, to see if it's intact. Copper, basically as a precious metal, tells us how the economy is doing. So, think about it this way. Factories are building, phones are being made, everything is very plentiful, people are buying, you need lots of copper for wiring, for electrical, it's a huge industrial need for our economy. Copper as a precious metal, when it's not getting bought, the economy is slowing down. So this kind of does show the pain that's being caused to the economy a little bit ahead of pace. So we can see the economic breakdown, how bad the economy is doing, while keeping track on inflation at the same time. Basically, how intact it is by how much power there is for oil to buy up. And gold, the old man in the room, doesn't matter so much. He only reacts when the dollar goes down. And he hasn't been believing that the dollar is going to go down. When the dollar goes down, gold will go up. Till then, as long as the dollar's strong, old man won't care, especially with 250 times the supply of actual gold. That's how that market manipulation works. And that's where at least, a deflationary asset, there's no creating any fake stuff to sell and trade to inflate the supply and shrink it down. And it's not, the Grayscale is, at least as far as we know, not trading any shares of Grayscale that it hasn't actually bought up of Bitcoin. So financial instruments such as that will actually buy it up, take it off the market, and then sell shares in it as a trust, fine. But when you're sharing 250 times the amount that even exists in the world, you're not holding that, it's not cool, guy. It's not cool. And of course, I've been keeping track on wheat because, global food shortage. That's why. That's pretty important. Of course, we'll take that one out to the day. Even in a global food shortage, well, why did wheat crash? Well, because no one can make it. The mines aren't working. There's no wheat to buy. And, this is futures too. Futures are a speculation game on the commodities, not actually buying the commodities. You're not actually buying wheat, which is weird. But if wheat can't even be made, well, then there's no money to be made in wheat. And if there's no money to be made, there's no money to trade and speculate on. And we start to see drops in prices even when we've got such shortages. So that's where I expect oil to show inflation still being intact going into the winter. And finally, when natural gas takes its hit because of the European crisis, so I'm expecting a bit of a turnaround. This resistance, I think we're getting close to snapping through and breaking it. We'll see. I think we're going to get another surge as we head into the winter and stockpiling begins. It's interesting with Russia dumping cheap oil, though. It kind of skews this off. I might need to switch to natural gas instead of crude oil. We'll see. So the gas supply, yeah, that's going to keep track of inflation, their ability to spend, but at a certain point, they won't have the money to buy it. When they don't have the money to buy it, won't print more to buy it. Everything seems like it's falling apart, or they're putting in energy rationing. Then it suddenly loses its profitability to be making so much. Like, the demand suddenly disappears. It can't afford the price, and if it can't afford the price will come back down. As long as you can afford to buy more at this price, the price keeps going up. That's why inflation goes, but people will run out of money. And they'll run out of money even sooner with the Fed raising interest rates. So then they can stop chasing inflation because they're not smart enough to do it on their own, and then inflation comes down. Different ways to think about the way these things are linked. Hopefully you get some critical thinking on all this, start to have an idea what things to watch, what baselines, as we now know that the NASDAQ and Bitcoin are very connected. And they broke a little correlation at the bottom, but they're heavily correlated when we have these big moves in the market, as we have these deleveragings. So we've got Bitcoin, and then Ethereum. Well, she trades a little differently, but still major movements in the macro. And they kind of step hand in hand right now. At least the direct correlation seems to be over at the moment. We'll see how this crash plays out. Ethereum still overtraded, I think, because of the merge. And there will be the sell the event, which, oh wait, that's tomorrow or the next day. Ooh, going to be testing that bull trend for Ethereum. Don't know if we'll hold it. Bitcoin's still barely riding this so thin line. I really don't think it'll hold. This looks so much nastier and scarier. Ethereum at least looks a little more hopeful and optimistic, but it doesn't have a lot of steam. It's running it all out, and you get to cracking this line, it's almost sets an even steeper, meaner standard. As in, we're going to have another line of resistance to break, 2 of them on the way through. Isn't that brutal? I wonder if other traders are going to look at it like that. Maybe it's just me looking at these points, but I seem to see a lot of action on my areas. So I don't know. Fib retracement has not been that important for what I do. Anyways, there we go. I got to come in and gloat that booyah, we definitely saw a nasty CPI. We definitely got the call back. And for right now, I'm not going to scare you with any other market fundamentals or statistics. We're going to stop with that. So, nice quick one for you tonight, folks. Hope you enjoyed it. Until next time, stay frosty.